Hi, everyone. My name is Lital Gruper, and I'm the CEO of Tarci, a continuous intelligence platform that focuses exclusively on generating accurate, dynamic, and actionable SMB data. In our talks with insurance carriers who service the SMB market, one of the most frequent things we hear is that it is very difficult to ensure renewal terms reflect the true worth of small mid-sized businesses. It takes a lot of highly manual, tedious work to spot changes in risk profiles if a business doesn't report it upon renewal. And in fact, the business owner might not even know that there are any changes that they should be reporting. Take, for example, Tarci. When we recently moved to these beautiful offices, it took me a few good months before I realized I hadn't switched our insurance to the new location. And I was horrified to learn that we probably didn't have adequate coverage during this time period. Plus, a little bit annoyed that I had to be the one to remember it, to be perfectly honest. In this presentation, we will talk about how dynamic data can help you take a continuous risk approach to managing SMB insurance. By doing so, you can save billions of dollars in claims from underinsured SMBs. So what is dynamic data? Let's take a look at some examples. Let's say you have a gym as a customer, and they decided to add a tanning bed service. Now, this is a material change signal that needs to be accounted for as it presents a new liability risk. Dynamic data would alert you to that change, and you can reach out and adjust their coverage accordingly. Another example would be if a nail salon decided to start offering mimosas and pedicure as a weekend special. This, by the way, is a true story that we're seeing in the data. Great growth idea by the small business, but one that presents a new liability risk that might not necessarily be captured during the underwriting process. With dynamic data, you'd get an alert that the salon has applied for a liquor license. Let's look at one more for good measure. What if a retailer added an online sales platform? A store that was previously just operating from a brick and mortar location might not realize there is an additional cybersecurity risk that may or may not be covered in their existing policy. And even if they do already have adequate coverage, you can take on the role of a trusted advisor and proactively let them know that their policy and covers their new route to market. The traditional way of managing insurance is to review a customer's portfolio at the time of renewal. This approach is a bit outdated as it doesn't allow you to be proactive. It takes time and it leads to a lot of missed opportunities and under or over coverage, as we saw in the last three examples. Through the use of dynamic data, you can be alerted to any significant changes in your customer's business. The benefit of taking this sort of continuous risk assessment approach are numerous. First and foremost, it allows you and your agents to build customer loyalty by being proactive and preventing any gaps in coverage. Secondly, it allows you to have a more accurate risk assessment and pricing of the policy. In 2022, out of 32 million SMBs in the US, Tarci saw that over 10.4 million SMBs experienced a change in their operations. Changes such as opening a new location, serving new markets, adding e-commerce capabilities, or increasing their workforce. In fact, any type of change that could have potentially impacted their risk profile. And today, these material risk changes are often discovered when there is a claim. Despite not officially being covered, carriers typically end up settling and paying part of the claim, costing the industry billions of dollars every year. By taking a continuous risk assessment approach to protect your client's business, you're also protecting your own and increasing your efficiencies as you go along. I'd like to thank you for watching this webinar today, and if you have any additional questions, feel free to reach out to us on tarci.io.